Hey, Blue Collar Millionaires. It's Chris and Kevin here again, and we got a special guest, Brian Fouts. He is a friend of mine and another mastermind, DM Alliance with Mark Evans DM. And I have seen him pop up several times communicating about his business and asking questions as a good entrepreneur does. It's best to be the dumbest person in the room, and Brian is definitely not the dumbest person in the room, but he does not walk in with the ego, and I have noticed that about him and love that characteristic. So, Brian, man, we appreciate you coming on and giving us an opportunity to hear your story. Tell us kind of where you started at. I don't care how far back you go, and bring us up to present day so we can get an idea of what this journey's look like.
Absolutely not. I'm glad to be here, Chris and Kevin. Appreciate it. So I got my start many years ago, as most people do, traditional path, low income family, was taught go to school, try to get good grades if you can,
Right.
try to go to college, get a job, 401k, that whole thing. And fast forward many years, that's exactly what I found myself doing. Many years ago in my 20s, I got that degree. I went to school and got the construction management degree. So I was in construction management for almost 15 years. And that was my first career. Had the family, the car loan, the mortgages, all that kind of stuff. And what happened to me is almost 10 years into this journey in life, I realized I was dead inside. I had no purpose. I had no passion about what I was doing or why I was doing it. I didn't know what was going on. And I knew something had to change. Right. And that was kind of my big kind of epiphany when I went and did my math and realized I was worth a negative amount of money.
Wow.
10 plus years in an industry, and I was worth negative after 401k, saving money, trying to pay down the debt, all that kind of stuff. And I had nothing to really show for it. If I died, my family would be left with debt.
That's
I was like,
crazy.
this is crazy. What is this? What am I being told to do here? And so that kind of set me on a journey to discover how to make money other ways, how to really look at my time versus money. And man, it was an incredible journey, but it led me to real estate first off. Got into real estate and started doing that, had some fun, got hooked up with a traditional financial planner who talked a big game, and I started to work with, and ended up quitting my job, going to real estate full time. And then that individual I was working with ended up losing all my money, over $500,000 in debt all of a sudden. I had no cash, no income. And I was just like, this is not the entrepreneurial journey that I thought it was going to be.
Hey, Brian, I missed that. Who was this guy? What happened there?
So it was an individual I was introduced to. And he was a financial planner, fund manager, all these kind of things. And so I ended up working with him and doing some investments and stuff. And let's just say that they did not work out. He ended up declaring complete bankruptcy, lost tens of millions of dollars of other people's money. I was one of them, and it was just a big lesson learned. And so that really set me on my second kind of part of my journey, is to discover really what are the wealthy doing? Because I realized when I looked around me, I'm just doing the same thing that everybody around me is doing. I'm working with the same advisor, by the way, and lost the money that they all lost too. I'm like, wait a second, this is not what the wealthy are doing or successful entrepreneurs are doing. So that really put me on a different journey to go find that out. And that led me to the Elevation Group, which is a business that I now own, a brand I own. And it taught people, the average person, how to invest like the ultra rich. And I fell in love with it. I was like, this is the coolest thing. Fast forward a couple years later, I raised 7 figures capital, acquired that business, took that business down and ran that one. I still have that business. And then recently, I've actually then started the Live in Legacy Association, another brand where we actually teach people how to really take their money and get it working for them, to really get yourself unstuck from that job, that business that you're stuck in, and then get your money working for you. So that's really what I've learned. But through that, I've really built a network, and I've connected. So people like Chris and Kevin here, as an example, starting a network, that's really what has set me apart from where I used to be in my old life. It's by having access to the right advisor. So today I can work with Robert Kiyosaki's personal advisors will work with us, and our members can work with them. It's a completely different place to be in than that traditional path. So that's kind of how I got to where I'm at.
What got you? What got you those relationships, like being able to get with Kiyosaki's personal advisor, that kind of stuff? So give us kind of context of what allowed you to build those.
Well, there's a couple of ways that happen. So one is just being willing to go out and put yourself out there. Like I literally one time, I remember I was trying to get in touch with this high-end person for marketing. And I called this one person that I saw on this course I had bought. I just called them up. They answered the phone. Then they made that introduction. That was it. It was literally just me picking up the phone and I got introduced to somebody. And then I started doing things. I started networking just kind of locally. So I did local networking first, got into some masterminds, started speaking at masterminds because of the results I was having in real estate. And then eventually that grabbed the attention of somebody else who then invited me to a private mastermind in my area. And when I sat down at this mastermind, it was 10 people. Keep in mind, I had just gone to local ones and this person invited me. Sitting next to me was Mark Evans, DM. This is in Washington State. Now, you know Mark, he doesn't travel very much, but I was sitting next to someone who was very successful, very cool. They heard my story. I heard them. And I have been talking to Mark off and on for the last 7 years now. So if you guys know who Mark is, he's a very highly successful entrepreneur. But I was just putting myself in the right rooms and getting myself noticed. And that led me to being part of masterminds and groups. That's really how it worked, is being part of these groups and high-level groups. And I got invited to another mastermind called the Board of Advisors about 5 years ago as well. Well, that one is you have to qualify, all that kind of stuff. And I'm still a member of that one as well. And just by being a part of all of these groups, you start being invited to talk, speak, network, private events, all that kind of stuff. And to this day, that's what I love to do. And then we bring those strategies of those individuals, those experts, to our membership. And that's kind of our business model.
So when you're at these events, you're telling people what you do, what you're looking for. That's one thing that I've realized, like you can go to these events and just sit quiet.
You can.
If you're not talking, then people don't know what you're doing. You obviously were talking because you were being invited to other masterminds after your discussion, even to speak. So they knew what you had to offer.
Yeah. And so one of the things that I've learned by going to these events and networking is one is I don't sell anything. Like I'm not there to sell the people there because well, one, they're fairly high level. So it doesn't really come across all that well. So one is I don't sell anything. I'm just there to just network, have, fun with these people and make connections, make relationships. That's really what it's about. Some of my best friends I've met at masterminds. They live on the other side of the nation. I mean, they are literally a 6-hour flight away from me, but they're some of my best friends because I've gone there with that open heart, open mind perspective. And then one of the other things I would recommend for anybody that's going to events like this is say yes. I've had some of the best events by just telling myself that when I go to the event, I'm going to say yes. If somebody asks me, hey, you want to go out, do this? Say yes. Hey, you want to go have drinks or go to lunch? Say yes. Because I always had that mindset of, oh, I'm tired. I'm going to go rest for tomorrow. I don't do that anymore. In fact, 2 weeks ago, I was at a mastermind and I was out to probably midnight to 3 o'clock in the morning every night, not partying, not drinking, none of that kind of stuff, but just networking. I found myself in the presidential suite, the biggest one on the hotel, just by saying yes. And out at dinner with some amazing people. Met a doctor that was just like, I just had so much value to give. And I'm having him come to my company, do stuff. I mean, it's just amazing when you open yourself up and allow yourself to have those experiences.
I think that's the gem right there.
I like that attitude because when I started going to kind of real estate events, multifamily, I would go there, basically not talk to anyone. Maybe the guy next to me in here. Then I'd be thinking about, let me hit the gym after this while everybody else was networking. You don't get anything out of it. No,
you don't. And I remember when I first started getting into this space, I still had a regular job, but I was starting to do real estate. I was invited to this event, and there was about a couple hundred people there at this event, and I knew someone who was speaking at the event, and they said, "Hey, do you want to speak too?" I'm like, "What?" I'm in construction. I'm, probably early 30s, 30 years old at that point in time. And I had no experience speaking at all. And I was like, sure. I said yes. I found myself speaking either right before or after Jeff Hoffman. Jeff Hoffman, he's the guy that invented Priceline and the airport kiosk. He's a billionaire. And I was speaking before or after him. I was like, you got to be kidding me. This is crazy. And then I found myself sitting down for lunch with him, invited him to dinner. Went to dinner with Jeff Hoffman and picked his brain, and it was mind-blowing what I discovered. So just by putting myself out there, I'm sitting down having lunch with a billionaire, and he's just giving me all this value. And so that I've had a lot of incredible experiences by just being open to what's happening around me, but also being willing to stretch myself a little bit and that beyond my comfort zone. And that has been one of the biggest things. And for me, it's not usually my area that I want to do, be outside of my comfort zone. But I've learned that you've got to really stretch that, and it's worth it.
Yeah, you got to be open, Chris. You're such an outgoing guy. Maybe you don't have that thing, but I always think of that as, when you go to these events, I think to myself, interested people are interesting. So be interested in other people. They will talk your ear off. If you ask them what they're doing about it. If you go in there and you're like, yeah, I got 1,000 units and all that, nobody wants to talk to you. But it's not like you're in at a bar just going up talking to random people. They're there to talk to people. So
exactly.
Get out of your head. This is not like talking to a person at the mall cold. They are there for you to talk to them.
Yeah. And as Chris, you mentioned, what room you're in is very important. Who are you learning from, and who are you actually providing value to? To me, is one of the things that I think a lot of people, unfortunately, don't understand because of that traditional path and that traditional programming that we have as we go through our lives. And that's one of the biggest things that I've had a challenge with is my mental programming. And it's one of my biggest passions now too, is really understanding how we think and why we think and how we take action. Mm-hmm. It's just crazy how we're taught at that young age to go to school, get a job, follow the pack, follow the herd. And yet when you're in these masterminds or these groups or even calls like this, start to understand what's happening that's different. How are the people there thinking differently? What's their mindset like? Because that's the thing that I have learned the most is when you're around these successful people, the conversations are different. The focus is different. Their attitude is different. And if we've all heard the saying that you are the average of the 5 people you're around the most. Yep. So I immerse myself at these events and I make friends with them so that even when I'm not at the events, I'm still around them. And that has been one of the biggest changes for me is my mindset and the way I think about money, financial literacy, all of these kinds of things. But that's exactly what I've seen and learned. And I take back to our following, our community, and help other people with that, that are in the same places that maybe they're stuck in their job or their business. Getting unstuck is a mental thing for a lot of people. And so that's one of my biggest passions is that.
I agree 100%. So I want to sidestep for a second and kind of dive in on your businesses. So define, you have 2 active businesses right now?
So originally started, I actually have a few. I've had quite a few actually, but right now I have the Elevation Group, which is a brand that I acquired in many years ago from Mike Dillard. He's the one who started it, at least. And that one is how to teach the middle class how to invest like the ultra rich. Now we still have that brand, but we've rolled it into the Living Legacy Association. So now that brand is essentially Elevation Group. And why we did that?
Let me pause you real quick.
Yeah.
So how do you acquire a brand?
So there's lots of ways to do it, but we bought the business. So how I came into owning that is a whole separate story in itself of just pure connections and just kind of random little events. But I found myself on a phone with somebody, and that ended up lending itself to another phone call that was in another phone call. And then eventually that led to the Elevation Group, the owner of that business at that time. And so at that point in time, I said, okay, I'd love to acquire this business. I can see the passion that I would have for, I want to acquire this business. And this business had done, 10 to 15 million of revenue a year at that point in time. And so I said, how am I going to do this? I don't have multiple 6 figures of capital, 7 figures of capital lying in my, on my mattress. So with the help of somebody else, we wouldn't raise capital. So we raised private funds to acquire that, which was my first time doing that. Really, no, that was my second time doing that. Second time we raised private capital in a 506 investment fund. So and that's how we took it down.
How much did you raise total to purchase?
We didn't raise. We raised 2 separate amounts. So basically 1.5 million. Part of that was purchase capital. Part of it was working capital.
Okay.
How does the business model work, Elevation? Because this is a little different.
Yeah, so it's basically a membership model. When we acquired it, that's all it was. So it had a lot of content that was being taught by expert advisors, entrepreneurs, business owners, their lessons, their strategies, and it was basically a big library of content when I acquired it. And so that's what we had, and it was a membership model. And over the years, that has evolved a lot. And so now it's got multiple courses. We have different levels of membership platforms. The content is very structured in a way that's specific to bringing somebody from that traditional path, not having that financial literacy that's not taught in schools, by the way, it's just not. And then giving them all the tools, the resources, and the connections that they need to really level themselves up, but transition from, that rat race job or stuck in the business to becoming an entrepreneur, investor, and essentially free. So that's the content of legacy and how it's structured. But we have courses now on real estate. We have a course on infinite banking concept, which is a phenomenal concept. If anybody knows what that one is, we have a course on.
Can you get high level on what infinite banking is? A lot of people's probably never heard that term.
Yeah. So it's, and I'll give you the straight answer, not the fluffy one. So it's dividend paying permanent whole life insurance that has a cash value aspect to it, which allows you to control your investment capital for like retirement, but also allows you to become your own bank, because you can then loan against that cash value and go acquire other assets. But at the same time, that cash value inside the life insurance gets a guaranteed rate of return compounded every single year, no matter what you do with the money. So you have your money in two places at the same time. Additionally, that cash value life insurance policy has what's called a face value, which is obviously life insurance has face value that is guaranteed to be passed on tax-free to whomever you want at some point in the future. So when you have these policies in place, day one, you have created legacy wealth. You have created financial certainty around those you love. You created an investment fund that you can actually leverage into two places at the exact same time, thereby basically doubling your wealth building potential. And you deferred taxes or eliminated taxes. That's just some of the major benefits of it.
Yeah, I feel like this, if I would have known this and my understanding of infinite banking, my level of understanding of it, I feel like that would have been a better move for me to make first instead of an IRA, a self-directed IRA.
Yeah, because it typically will blow those things out of the water. Yep. Now, I learned about that concept, infinite banking, when I was first getting my start as an entrepreneur, but the person that was teaching it to me didn't really know how to use it. And so part of my journey was I wanted to discover how that thing worked. And so I became licensed in the strategy. I have worked with 5 different advisors that can actually implement that and teach it. I built a course on it that teaches the average person how it works, because I feel that it is so powerful. It is such a foundational strategy that I implore anybody who's listening to go learn how it works. It can transform your life. In fact, you've heard about why do wealthy families get wealthier every generation? Like, I've heard people ask that question. One of the main ways is life insurance, because every generation, the face value gets passed on, and they repeat, and repeat.
So powerful.
Brian, is this what's taught in that book, What the Rockefellers Would Do?
Yep.
I read that book like years ago, and I was like, I got to do this. And then it's just like one of those things you never get around to.
Right. Exactly.
I found it fascinating. And then actually Mark Evans sent me that book.
Yes.
And then I was like, all right, now that's a sign. This guy's sending me a book I already read. I mean, I read it a long time ago now. So how get kind of like, let's go through if Chris and I did that, what would we do? So we have kids and everything. How do we do that? How do we take loans? How would we do it?
Absolutely. I love the strategy. I love the concept of it.
What we're going to do is, because you've got a course on it and you're educated, we want that link so that these viewers, millionaires, they can get to you. And because I believe this is a massive game changer. I've not done it yet. I've just been calculating education the last couple of years about it very organically. So, yeah.
So there's not a lot of books out there on the concept. So I have my own guide book that I give out to people to learn how it works. But I created the course because I realized exactly what you're talking about. You hear about it, right? You maybe see some information. Maybe you read one of those kinds of books. There's a handful of them. Garrett has one. Patrick Donahoe has another one. And you read these, and then it's like, okay, cool. Now what? Like, there's still this gap.
Yep.
And so what I did is I created a course that teaches the 3 levels of how this works: how you actually start it and fund it, how you maintain it, and then how you actually use it on the backside of life. And so I built the course on it. And so with that course, what we've experienced is 8 out of 10 people that go into our course will then use the strategy. Before that, it's 1 out of 10 might do it, because all of a sudden they can very clearly see exactly how they'll use it. That is one of the biggest issues I have with this strategy and people that use it, or people that put it in place for people, is that if you don't teach the people how to use it, don't do it. Please don't do it, because putting it in place is fine, but using it is where the power's at. That's where you have fun with it. And it's amazing that when you understand how it works, how you become your own bank for real estate and fund your deals, no matter what's going on with the economy, you have access to capital, like guaranteed capital. It's not going anywhere. And by the way, it's private too. The government can't see it. I love that part of it.
Wow. Okay.
Right. Yeah. So there's so many aspects to it, but you control it. It's a loan. So when you borrow against it, it's called the loan provision. But so you can borrow against the cash value. So let's say you put, I'm just going to use round numbers, big numbers for ease, put 100 grand inside of a policy. You have $75,000 to $80,000 or $85,000 of cash value that's getting a guaranteed rate of return every single year, compounded for life.
Okay, so what is this? Where's this rate of return coming from?
It's contractually guaranteed with the insurance company.
Okay.
So when you set it up, that'll be determined at the very beginning. So 3%, 4%, 5%, something around that range typically. Right. And now keep in mind, that's one value you get inside of this.
Mm-hmm.
The second value you get is the face value, which I talked about. So day one, when you have a policy in place, you have the face value. Mm-hmm. So if you have any concerns about your family, them be taking care of something that happens to you tomorrow, this takes care of that day one. It's tax-free generational wealth right there. Okay. The other part of this thing is it's also tax deferred. So when the money that's inside there, it's as it grows, it's not taxed. If you take it out as income, then it's taxed. But guess what? There's ways around that. It's called tax-free retirement planning. It literally is how they do it. If you've heard that term before, tax-free retirement planning, it's done through life insurance. I won't get into all the logistics of it, but yes, you can create a policy specifically for tax-free retirement. It's really kind of crazy.
Brian, so I put 100 grand in this thing. So that's the face value. That 100 grand is sitting there for.
No, the face value is probably going to be $2 to $3 to $4 million.
If so, it's okay. So
Day
you put
one,
100 grand in there, and if something happens to you, is there a term on that?
No. So that's why we love this strategy, because it's in place for your entire life. It doesn't go away. It's not like term insurance or car insurance you cancel or something. It's in place for your entire life. It's guaranteed to pay out. Now you got to make the premium payments, of course, for the first 6 to 7 years, but it's guaranteed for life. And so that when you put the money inside of it, the insurance company is a business. They know your average lifespan. So it's a weird concept to think about that. So they understand what they're doing. So they're taking that money, the 100 grand or whatever it is you paid in premiums, they're going to invest it. And they're very, very, very good. The average age of the insurance companies is 110 years old. So they've been around for a long time. They know what they're doing.
Mm-hmm.
Like, this is not a unique strategy. It's not new or anything. It's unique, but it's not new. And so these companies have been around for a long time. So that's why we love it. Now, when you're putting your money in there, Kevin, like you said, the face value exists day one. Like, that's the cool thing. Now, as time progresses, though, the cash value is going to grow as well. And eventually it'll be more than what you put into the policy. That's what gets really fun. And then it just starts to compound over and over and over. And that's not even including borrowing against that cash value. So let's say if you have $50,000 in there, you can borrow $50,000, take it and go buy some real estate properties that are cash flowing. You still have $50,000 of cash value in the insurance policy, getting the guaranteed rate of return. Now you're paying a simple interest rate back, but it's a loan that you control. So you can make the payments or not. It doesn't matter. It's up to you. It's your loan because it's your capital.
But it's deducted. Let's say that you do die and you got a face value of $5 million and you borrowed 100, then you're going to have 4.9 that's paid out from the face value.
They settle up.
So from the insurance company's perspective, it doesn't matter if they invest into bonds or they invest into you. It doesn't matter because they're protected because they have the face value that it'll be deducted from. So from an insurance company's perspective, they don't really care.
Right.
What's the process on that 50 grand? So you got 50 grand in there and you want to go get a loan. How long does that take? What do you have to do?
Call them up and say, I want a loan. 2 to 3 days.
Wow.
Yeah. Usually what it's about 2 to 3 days. Yeah. Because you just got to call them up. They'll send you the paperwork. You fill it out, send it back. They wire the funds. You're done. It's a very simple process.
I've also heard that you are borrowing on a smaller interest, a lower interest rate than what they're paying you. Is that correct? Or is that just based off how it gets structured in the beginning?
Now, yes and no. There's always different scenarios, but here's what I always recommend to people is when they say, hey, Brian, I've got this investment opportunity. I've got cash value life insurance and I've got a bank approval. What should I do? The answer is it depends. It's always going to depend because you've got to look at the rates of the bank. You have to look at the rates of your personal bank, your cash value, and you've got to decide what is the best for you.
Mhm.
Now, a lot of people will say, well, I'm going to go with my own bank first because guess what? It doesn't report to the credit bureaus. It's private. I control it. If I miss a payment, it doesn't do anything to me. I can not make any payment and they're not going to do anything to me. It just accrues.
Mhm.
And so that's what you got to make that decision. Now, some people might do a combination of bank financing and their own insurance bank financing. I've seen it all. So it's kind of there's not really a right answer to that one. But here's the thing too, when you say about it's a lower interest rate, you're right. Typically you're paying simple and earning compound. The compound will eventually beat the simple interest over time. Now that doesn't account for the cash you're getting from whatever investment you're into as well.
Right.
So that's why people say you can't get 12 to 18% returns in your cash value. Yes, you can. If you're getting 10 to 15% on real estate and you're getting 3.5 to 4% inside the policy, yes, you can.
You get paid twice.
You get paid twice, yes. And that doesn't even account for the fact that these are called dividend paying permanent whole life insurance. Dividend being the key word right there.
Okay.
So these ones that we set up are typically dividend paying, which means as the companies are profitable, they pay dividends every year. There are companies that have paid dividends every year for over 108 years. Even during the recession and the depression, they still paid dividends because they were still profitable. So that is something to kind of keep in mind with these kinds of strategies. It's been around for a long time. The 401k has only been around for what, like 50 years now? But these have been around for over 100 years. So it's a little bit different.
So,
Brian, I'm gonna get in your group because I got to get more info on this. And you do a great job of explaining this in layman's terms, which is really important because it's complicated. But it just seems like a life hack. Chris, are you like me? Like if I find some hack, I can't unsee it. I got to get in on it.
every time it gets mentioned, I'm kicking myself.
I know, every time.
And so
Well,
let me ask you this. So I've got you used the example of $100,000. Let's say that somebody in here is like, hey man, I don't have 100,000 a year. That's disposable money that I can throw into something like this. Is there a minimum?
No. So here's the fun thing about this, and this is where I said I created a course on this because there's so many layers to it, but it's not complicated once you see the picture. It's like people are like all of a sudden their mind is like blown away because like they're like, holy, why is nobody talking about this?
Right.
Well, because industrial America needs employees. That's why, to be honest. Like we won't get into the whole educational system, but that's why, in my opinion. So here's the thing. So you have to qualify for it from a health perspective. You do have to qualify. The older you are, the more expensive it can be. So it's better to start young.
Man.
But 8 out of 10 people that start this start on their kids. Kids is one of the easiest things because first off, they don't have to qualify. Like they don't have to get the physical, the blood work, any of that kind of stuff. They'll qualify. It's cheap. And if you start it on your kids before they're typically age of 15, start when they're younger, when they're retirement age, they'll have multiple 7 figures of tax-free retirement set up for them already day one. In fact, I'd have some people that I know that are doing this on their kids. Their kids are in their 20s now. Their kids will never have to get a car loan from a bank. They'll use their own policies. Down payment for a house, use their own bank. Go to college, use their own bank. They're not reliant upon the government or banks to fund their life. So I want you to think about the mindset change that the wealthy have versus the average person right there. One of the biggest examples I can give right there is they set up their own their kids, so they can become their own banks. They don't have to rely upon the financial institutions that we're all taught to rely upon. Imagine how that's going to change those kids' minds around money. It's mind-blowing.
Because Brian, one thing I do is I have a 4-year-old and I pay him I think it's $12,200 a year now.
Yeah.
And I've been doing that since he was born. So he's got a little stack of money right now. That he makes a little bit of money on. But I would love to have him. I mean, I always think, because I just think, I look at him running around, I'm like, bro, you don't even know how lucky.
Yeah.
When you're 18 or 21 having this,
Absolutely.
you don't have to do shit. You don't. That's like my biggest motivation. I don't want him to have to do a lot of the shit I did.
Yeah. And Chris, obviously you've heard Mark talk about this strategy. How many policies do you think his kids have? And by the way, you can have more than one.
Yeah.
You can have multiple. So this is the crazy thing. In a family, every family member can have one, but you can have more than one on each person too. Now, granted, This is life insurance. So we all have a certain life value.
Right.
It's a weird thing to think about. Now, this is me getting kind of technical, and this is what the other people that talk about this don't talk about, by the way. What's the life value of a child?
You can't put a value on it when you're asking a question like that to us, but we want to know your answer.
It's almost nothing.
Wow.
No, I'm thinking of it from a monetary perspective. I have 3 kids. Yeah, I'll never see them.
Yeah.
But a life insurance company, more than happy to insure a kid, because guess what? Their face value is not very big because they don't have a lot of net worth or life worth yet. Now, as they get older and start doing things and you have a job all of a sudden, your life value gets higher and higher and higher. And so you can layer the policies. That's the cool thing. Someone says, well, I don't have a lot of money. Don't matter. I don't care. Start now. Now, yes, you should have consistent income to make sure you can make the premium payments because you got to make those. But you can start at $100 a month. I mean, my first policy was $75 a month, $500,000 face value. And I started that thing because I wanted to get this thing going. But the cool thing is as my life value increases, I can layer policies on top of that. It's amazing. It's
interesting. Okay. I was going to ask you why you would layer, like what would be.
Yeah, me too. I was thinking
you're increasing the value. So like,
got
now my face value is $1 million. Now it's 2, now it's 5, now it's 10. So that's how you can do that. And then you can get them on your spouses. So like your spouse can have them back and forth, like that kind of stuff. The other main way you see this work is in business. So a lot of businesses can benefit from this. It's called key man insurance policies. You probably have heard of that. Yeah. But guess what? If you do it as a cash value policy, all of a sudden the business has an asset as well. Not just the insurance, but now it has an asset that you can fund. And all of a sudden you can become your own bank if you do it right. So a lot of businesses will do this in a couple different ways. Because people don't realize how powerful life insurance is. Like when you see like a big coach for a university get a huge payout when they retire, do you think they're getting that in just pure cash? Well, usually no. Oftentimes they combine it with life insurance, cash value. The university will fund it. Now, why would they do that? Guess who's the beneficiary of the life insurance? It's the university. So they may give a $10 million bonus, but they have a $50 million face value life insurance policy on that they're going to get eventually down the road.
Wow.
So these are things that are happening behind the scenes of corporations, wealthy families, and successful business owners, entrepreneurs that most people don't know about. So I implore people to learn this kind of stuff because it'll change the way you think about business, the way you think about your family, the way you think about your future, generational wealth, legacy. It can all change when you have the right knowledge, and it's there.
This right here will make you a blue collar millionaire. I mean, you won't have millionaire. I mean, this could add a B, replace the M with the B if you play this game right. I mean, this is when I first heard about this. I think what is Garrett Gunnarson's sacrificing sacred cow, something like that.
Killing the sacred cow.
Yeah. So he he was communicating a lot of this in there. And then Chris Noggle is another guy that kind of speaks about it. But you're only the third person that I've really had dive into it and kind of give an explanation, because I've had several people say, well, my carrier down the road that has my house and auto insurance does whole life cash value, all of that.
No, they don't.
And it's set up differently because I've asked that question. I was able to attend a more private situation about it. And I said, is this the same stuff that you're picking up from your local insurance guy? And they were like, no, it's designed completely different.
It is. And I've actually, to the point where I'm not disparaging agents or anything, but it's like 99% of them don't understand how to set this up. I've had that experience, by the way, of them trying to set it up for me and not working because it didn't have any cash value. And so I've actually even had people go through my course or watch my presentations on this and then call me and say, hey, can you teach me? And they've been an agent for 20 years because they don't understand the structure of how to set it up. And so you can read Nelson Nash. Nelson Nash is the gentleman that did start this strategy way back in the day, how he streamlined it or mainstreamed it for the average person. And so that's a good book to read. It's called The Infinite Banking Concept by Nelson Nash. You can still get it. So that's a great place to start with it. The other thing when you mentioned it's not the same, Chris, you're right. And the reason why it's not the same is that there's a different focus when you set these up. One is it's built custom for each person. It's customized for you because there are specific writers and things you can include that benefit you, but it has to be a fit. So that's the key thing right there. If you talk to somebody, make sure they're building this for your situation and your outcome. The other thing is like when you're doing this, you can maximize the cash value or maximize the face value. Now, here's where this is me just being very open with this. Which one do you think gets more commission for an insurance agent? A larger cash value or a larger face value?
I would think face.
Correct. Now, when you maximize face value, you minimize the cash value. What we're doing, and the people we work with, is you're maximizing the cash value and minimizing the face value. That flips the whole thing around all of a sudden. Now that reduces the commission structure for an agent. So you've got to understand that. And so having the right knowledge, like that's why I built a course, by the way. Having the right knowledge before you go talk to an agent is paramount. Like I'll tell people, says, no, you don't rely upon them to educate you. Educate yourself first so you can ask the right question. And so we work with a handful of agencies that really understand the concept. And they've all been through my training. Some of them actually, by the way, some of them are my previous members that have gone through it and now they are doing their own thing and they do this strategy. But I always ask them, I said, hey, what makes a difference in a conversation with a client? And they said, if they're educated or not, if they've actually learned, and it does not take time. It takes maybe a couple of hours. That's it to learn about this.
Wow.
So
this is powerful.
It's an interesting, powerful concept. And it's interesting right now. It's very popular right now with a lot of entrepreneurs because there's a lot of cash lying around and they're wanting to park it somewhere to get it growing, but also protect it. And so that's why a lot of people right now are looking at this strategy as a way to protect their money, but also keep it liquid because it is considered a liquid asset.
I think that's the biggest turn on about this is the fact that it's not like equity sitting in real estate where you got to go refinance it and go through a whole process. It's more like a credit card. It's a line of credit you can pull on at any point. And as soon as you pay it back in, you can pull it right back out without having a bunch of transactional paperwork and middlemen to give you the approval on it.
Yeah, it's exactly. And, the liquid asset part of it, some people don't really understand that it's considered a liquid asset. That's actually per the government. And so if you understand, liquidity, who do you think one of the biggest investors into dividend paying permanent whole life insurance is?
I don't know. Tell me.
Who has to have liquidity? What institutions have to be liquid?
The banks.
Banks have to be liquid. They have to have a certain amount of liquidity. So if they take in $100 million, they have to have, I think, 10 million liquidity in liquid funds? I think it's somewhere around that number. So where do they put it? Well, assets. They also put it into life insurance. They're one of the bigger investors of it. So they're taking your money, literally take your money, and they turn around and put it into life insurance, borrow, give it right back to you again for more returns. They're making money off of your money in probably 3 places at the exact same time. So I just say this, do the same thing the banks are doing.
Absolutely.
Don't let them take your money and do that to it. I mean, it's crazy that's what they do. And why do they do that? Because they need liquidity. Well, here's a fun thing. How much liquidity does a bank need? We just said that 10% approximately. It varies. How much does a life insurance company have to have?
I don't know that.
100%.
Wow.
Really?
So if they take on $1 million, or if they owe $1 million in face value policies, they have to be liquid $1 million. So if you think of that for a second, where would you want your money to be at? Holy cow.
Much safer.
When you think about this, how many banks went under in the Great Depression?
We just saw it happen, run on the banks over in Silicon Valley.
Yeah.
How many life insurance companies had underperforming assets in the Great Depression in the 30s? It's like 3% or 5% of their assets were non-performing. None of them went under, by the way. Wow. They were liquid. They still paid dividends. Same thing in the last recession we had. Same thing. And so it's kind of cool. We had a lot of our clients who were obviously had some losses, I guess I would say, during that time. But those who had their money inside life insurance became the bank after the recession hit. And all of a sudden, we're buying assets like crazy. You guys know Ken McElroy? That's what he did. So He talks about it. So he and Robert obviously Kiyosaki,
Right.
they use the same strategy.
Brian, was the guy who lost your $500,000, was that the trigger that started all this?
No, what started that loss was he was just mismanaging the funds into jumping on shiny object.
No, I mean, his loss, was that the trigger that made you get so deep into this and learn better ways? Yeah,
absolutely. Yeah, because I had the strategy in place. I thought I had my money in some different assets and stuff. And at this point in my life, though, I didn't really have purpose. I didn't have a why. I was just taking action, but I didn't have a direction. So I jumped on a lot of things. That individual was chasing a lot of shiny objects, we found out, and just the assets were not being backed up, essentially. And so I lost cash flowing assets that were actually cash flowing. But since when you declare a bankruptcy, doesn't matter. I lost them all. But yes, this one strategy was one of the first things I was introduced to, and it just hooked me in. And over the years, I have just realized how every time I get back into it and I start talking about it, I realize how powerful it is. And I love to share it. We've had thousands of people go through our courses on this one strategy, and I've seen the results of it. It's amazing.
What does this course look like? I mean, I'm going to put myself through it because it's something I need to go and pull the trigger on.
It's like a simple. I think it's either $500 or $900 for the course. It's literally like about 4 hours, and it walks through the kind of the 3 steps of how you use the strategy. So one, how you start it, fund it, and then how you maximize it and use it as the bank, and then how you then liquidate it if you want to on the back end.
So how do we find an agent that's going to structure this and have the understanding so that they can structure this?
So there's one, you can just do your own research and find them. They are out there. You can just look them up and you'll find them. A lot of people talk about it. What I look for is someone who actually started out with this as their foundation. And what I mean by that is you can have a life insurance agent who then does all these other things and infinite banking. I prefer the ones that actually literally focus on infinite banking first, and then they do other things as a kind of a way to beef it up. Mm-hmm. So we work with, and so when people go through our course, we actually will do a personal introduction. Okay. So they go through our stuff. I'll just say, hey, where are you at? What are you trying to accomplish? And then what I will do is I'll then pair them up with the right advisor. Now, this is key. This is key. If you're making $100,000 a month in income, in revenue from your business, and your life insurance agent is making $3,000 to $4,000 a month, is that a fit?
No,
it's not.
No.
But the reverse can also be true. So we pair people up with where they're at and going with the right people. So we have about 4 we work with, Paradigm Life, Prevail. Then we have a couple other kind of more private ones that do it for very high level individuals. And we do that because, well, one, Patrick Donahoe and I built the course together. So he knows exactly what he's doing. This is how he got his start. He learned it from one of the premier experts that started this stuff decades ago. Prevail is we work with a gentleman named Adam Dorn. He's one of my members, and he got so into the strategy and fell in love with it so much that he became licensed and made it his entire focus. And so he works with a company called Prevail, and he's the premier guy that does the strategy. We've had hundreds of people work with him too. So it's finding those right people that really focus on the infinite banking concept first.
It seems like a very hard person to find because it's decentivizing, I guess you would say, for the agent if they are pushing more of the cash value focus instead of face value.
Correct.
And I think that's what, when I was in this private group, that's what I realized is like it's going to take they got to have some other stuff going on, or they got to have a very kind of a nonprofit heart in them. Not that they're not making profit, but to sit there and say, okay, I'm going to reduce my commission, although I could go out here and push this more, still be helping an individual get on the right track. But this is a better structure, even though it does reduce my income. It's a very hard thing to find in human nature in general.
It is, there's reasons why they do that and sometimes why they don't do it. But one is that this is usually the commissions are paid over time too. So obviously first year commissions are good, but they're going to earn commissions for years after this. So got to keep that in mind. And people say, well, they're making 100% commission in year one. Why am I paying that? It's like, you're not. The insurance company pays commissions, not the client. The
Right.
client pays the premium. That's it.
Right.
The insurance company pays commission. So I always tell people, be aware of it, but just understand that this has been around for hundreds of years.
Yeah.
It's paid by the other company, not by you directly. So
Yeah,
whatever commission they get does not affect the premiums. So that's something to keep in mind there. But yeah, it's hard to find that because there's all these other financial products that they always want to push. And they're oftentimes traditional mainstream ones that don't fit with the infinite banking concept. The other thing you got to look at too is that when you have this strategy in place, how are you going to use it? Like that's paramount right there. It's because before you talk to an agent, you should understand, okay, here's the 3 ways I want to make sure I use this: retirement, legacy, and investing. As an example, well, guess what? That can be 3 separate policies because they get all structured differently to maximize them. And now, if that sounds complicated, I'll say this: it's not, because you don't have to do anything.
Right.
Other than understand what you're going to use it for. They will structure it if they're the people that that know what they're doing. The other thing too to keep in mind is that some of the firms that you go to will try to push their stuff on top of you. That is where I draw the line. I don't like that. You got to be very careful about that. What I mean by that is if you go to a mutual fund company, 401k, well, guess what? They're going to have you invest into their funds that they make commissions off of.
Right.
Right. So the more you put in, the more they make. So they're going to push their own product. So just be kind of careful of that. If you're looking at a company, are they trying to sell you insurance and then push their products on top of you? Because they're making their money more than once all of a sudden, which is nothing wrong with that. Just be aware.
Yeah.
So there are some companies that will have you do the policies and then sell you real estate opportunities. Nothing wrong with that. Just be aware.
Brian, devil's advocate, what are some things you hear people in the industry who might not like this? What do they say to deter people from using it?
There's quite a few that I've heard.
I've heard
Some of the more common ones are buy term and invest the rest. You know who says that? Buy term and invest the rest. Unfortunately, for most people, that does not work. So first off, most people don't know how to invest.
Yeah.
Like, okay, so if you're getting $500 a month instead of putting it into insurance, what are you going to invest it into? $500 a month. What are you going to invest it into?
Enough to invest only 500.
Yeah, that's going to get you a 10 to a 15% ROI.
Yeah.
Most people cannot invest. So that's one of the bigger ones right there. With terms or with infinite banking, it's like you're going to be paying that every month and it's going to automatically grow. Also, it has the benefit of the face value day one, whereas term insurance, it's limited, it'll go away. So for term insurance, it's going to go away eventually, you have to have built enough net worth to surpass the face value of the term insurance, which most people can't do that. You're talking millions of dollars. So that's one of the things right there. The other one is that I'm too old or I have a health issue. Well, that actually can be true. If you're too old or you have a health issue, you can't get insured on yourself. But guess what? You can be the policy owner on your kids' policies, on your wife, on your business partner. You can actually do it in other people and do the exact same strategy. So it's very versatile. That's one thing a lot of people don't realize. 2, it's expensive. Like I hear that one, oh, it's more expensive than term insurance. Of course it is. It's guaranteed. Term insurance is not guaranteed. Mm-hmm. How do you win in term insurance? How do you win if you have term insurance? You die.
Die early.
Oh my gosh. It's like, that's horrible, right? The insurance company loses if you die. Yeah. With this one, it's guaranteed. It's going to happen at some point. We know that. So it takes that whole thing off the equation, out of the equation. It's just not part of it anymore. It is more expensive because it has more value, but the way that we structure it is different. So this is that concept of it's too expensive is removed when you structure them correctly. When they're structured correctly, the majority of your money goes to the cash value, and therefore that objection is gone. If you go to a traditional person, correct, that is a good objection. But with a true infinite banking advisor, that one will be eliminated because more of the money goes to the cash value. The other thing that I hear a lot about this one is that you cannot get double-digit returns. I cannot tell you how many people I've come across that have the policies in place, set up correctly, and they're not using the cash value to leverage into investments. So if you have this strategy in place and you just sit on it, don't do it. If you're going to leverage it and double dip your money and make your money grow faster and faster and faster, absolutely do it.
Yeah.
Do it. That's one of the bigger objections. Let's see. What are the other ones I hear? It's only for the rich. I hear that one all the time. It's only for the rich. Well, guess what? Yes, if you're very wealthy, you can accelerate this thing and use it fast. But that's just like if you're wealthy and you want to go buy a $500,000 house, you can pay cash. If you don't have that, you're going to have to work for it. It's the same concept, right? And I'll say this: life is not fair, and money is not fair. Money does not care. It doesn't care about your time or this other person's time. It does not matter. Life is not fair. It's not going to be fair. And so, yes, if you want to have this policy, this in place, and you say, "Oh, I don't have, $500 or $1,000 a month," do you have 50? Test it out. So a lot of people watch you do this. They'll test it out on their kids first because it's cheap, and they'll watch how it works over a couple of years, and then they'll level it up. So yes, if you have more money, you can accelerate it. Is what it is.
I hope just at least 50% of who's watching this starts this. I'm gonna help the 50% come about, because I'm jumping in your course.
Me too.
I've known it for a few years, and it's one of those things. Oh man, this is nice. This is awesome. I should do this. And then you leave, and a week later you forget about it because you're in your daily activities, just grinding away.
I need to know this. That's how I feel after this. This is a great one, Brian. This has been great info. Got a couple people. This is mind blowing. We're getting good comments here.
Yeah, it's a one of those concepts that I have seen it transform people's lives from a couple different reasons. One is that you're using a strategy that we've been told it's reserved for the elite, and it's not. It's just a matter of knowledge. Why do wealthy people do it? Well, because they have different advisors. That's why. They're not talking to H&R Block, by the way. They're not talking to like your mom's financial advisor. They have high-level people, and high-level people know about this strategy. So that's why they're doing it. But what I've done is opened it up to everybody else. That's one of my bigger passions. But that's one of the big things right there, is that you just don't hear about it because, well, one, they're not talking about it. They're just not. And corporate America doesn't like this. You think the IRS likes the strategy? No, because they don't control it, right? They truly don't control it. It doesn't benefit them, right? All these kinds of things, and it's private, so they don't like it, right? And the government doesn't like it either, because guess what? It's out of their control. Now, granted, they have restrictions on life insurance, but once again, it's more of a private strategy. And then one of the other things to keep in mind too, I mentioned it's called mutual. Dividend paying life insurance, but it's with mutual companies, not stock companies. And so what's a stock company? Publicly traded, right? They're investing for their shareholders. A mutual company is owned by the policyholders, you and me. The profits go back to us. That's called a dividend. It's not a stock company. So it's not owned by a bunch of other people. It's owned by the policyholders. That's the kind of companies that we work with. So there's all these little kind of small things that when you put them all together really make this work. And it's not hard. It's actually very simple when you have the right people on your side. And that's really where that's why I started my journey, was to find that out and to bring it all together in one place.
Dude, this has been incredible. We're coming up on the hour mark, and I want to make sure we get to a couple of other, I don't know if you call them passion projects, but what you got going on. I'm glad it took this turn, and please make sure that we get your link in the comments section.
Yeah, it's going to be in the comments.
Yeah, tell us your. So you had just launched this golf brand.
Oh yeah.
It's even got some cigars along with it. I actually purchased some of the cigars, and Nicaraguan tobacco. And when I heard that, I was like, okay, that's the tobacco light. I'm not a massive cigar smoker, but I do it enough to. I finally asked, "Hey, I like these. Why do I like these?"
Yeah,
and I learned it was the tobacco. So anyway, really, really good cigar that you got that you're selling, but you also have golf balls. So tell us more about it.
Yeah, so it's as I went through my journey, I started looking at opportunities, and I started seeing opportunities. And one of them I realized is acquiring businesses, previous existing businesses, cash flowing businesses. And so a buddy of mine had this company called Big Golf, BIGG Golf. And I looked at it. I got together with another partner of mine, Chris, and we ended up getting equity in this business and are now relaunching this back out there. And it's a quality golf ball. It's a distance golf ball called the Score Crusher. That was the main product. And so when I looked at this business, we said, okay, it's got golf balls. They're very good. People love them. Comments, testimonials, 5-star ratings, all that kind of stuff. So then we said, oh, what else can we do with this business to grow and scale it? So we added, as you mentioned, Chris, our cigar line. So it's by Epic Cigar, our partner. Mm-hmm. So it's called the Big Stick, because obviously it's golf. Yeah. High quality one. We actually then got these. We have these cigar holders. Nice. So it's a hollowed out golf ball that you can put your cigar into and then put it in the ground so you can hold it while you're teeing off.
That's cool.
Yeah. Yeah. Like or you unscrew this thing and you can stick it in the cart and stuff, whatever you want, but it helps protect your cigar. So we did that. We have I don't have it sitting in front of me right now, but we have these stainless steel golf mugs. Drink 20, I think it's 24 ounces or 22 ounces, that's spill proof or leak proof. So we got those we just launched. So we're starting to add more products as we go. Yeah. We have a membership platform for this, so that you can get, or a subscription platform, so you can get golf balls every month. So yeah, it's a fun business, and that's one of the things that I'd recommend for people that are listening to this. If you're looking to get into a business or even acquire one, find one that's awesome, find one that's fun, find one that actually supports your lifestyle, and it's not work all of a sudden. It's just fun. My buddy Chris right now he was out golfing with who's the crazy guy that wears the funny shirts and the pants?
I don't follow golf, so I wouldn't be able to.
Gosh. I'm John Daly.
Okay.
So John Daly's actually held our big balls. We have Chelsea, as she's our affiliate manager. She's a professional female golfer, is one of our people on this business too. So it's a lot of fun. So I just say, man, if you can have fun in business, it makes the work fun.
I love it. I love it, man. I appreciate you, Kevin. You got a question?
No, I got a lot of questions, but I'm going to go on his course and get the answers. I could do this all day here because I got a lot, but I'm going to go on the course.
Yeah,
we're going to circle back about this. Yeah, you know what? I'll ask a quick question, because you put two things I like. I love this, what we're talking about, the life insurance, and then buying businesses. Chris and I love it. You could have a policy, you fund your own policy, then borrow off it and go buy a business.
Absolutely. I've had members do that.
Yeah.
That have because I started some small businesses from scratch, like some e-commerce ones. I did one with actually Mark one time, Mark Evans. But yeah, I've had members use their policies to fund those startups. So
and we always talk about it. That to me, it's like a super safe way. It's so much less risky than starting.
Yes.
And you don't know if anybody wants your thing. You buy this golf business. You already had all these reviews. You already know people love it. Yeah. Now you're just figuring out, how do we market it better? What do we add on? That stuff is fun. Rather than, hey, let's design a golf ball. Like, I don't want to do that. I don't know if this is going to work.
I don't want to design a golf ball.
You might hate it after a year. You wasted all that time and money.
Yeah, and it's not easy to buy golf balls either. Funny enough, if you want to go have your own thing made, it's not $5,000, by the way. It's six figures if you want to go buy these in bulk. So, and it's hard to get in line, by the way. So we found this kind of thing out, is that it's about a 6-month wait to get. We got 20,000 dozen. So do the math on that. Wow. It's a lot of golf balls. It's a full container ship. It took us 6 months to get it. So yeah, so you're funding things, and if you can fund it with your own capital, you control the funds. All of a sudden, you control the payments. All of a sudden, it opens up so many more doors.
It's a whole new game.
Yeah,
entire new game.
Yeah,
so great.
And we've had actually members that they act as their own line of credit by using their bank, their policy. So they're their own line of credit. So they don't have to worry about getting a bank line of credit or that kind of stuff for doing payroll, that kind of stuff. They use their policy and they benefit, because the more they use it, the more the insurance company makes. But since the profits go back to the policyholders, their dividends get bigger.
Dude, I think that's probably the biggest hack right there, because so many businesses have cash flow problems and they need lines of credit, and then they need some type of asset to secure that line of credit to. And this right here, you just said, forget you banks. Like, we'll bypass you.
Yeah.
Just go ahead and get it started now. Man, I wished I had acted on this when I first heard it, and I wished I'd have known it.
It's why Garrett talks about it.
Here's the thing about, everybody needs access to credit lines. And in 2007, I had a lot of credit lines, and one day they just turn them to zero, even if you don't owe money.
True.
I remember I got like 3 things in the mail in like 10 days. and it was like, oh yeah, it's now 0, or it's 1,500 from 50 grand. This can't happen.
Yeah, I had to go from I had a $30,000 or $50,000 line of credit, and it went to 0, and I had a bounce on it. I was paying a bounce on it, and they shut it down. Didn't even tell me until I tried to acquire an asset, and they couldn't.
They don't tell you. Yeah, I did the
Yeah.
same thing. I was never behind on anything. I had it really low. They just snap it.
Yeah.
You just done.
Yeah. Yeah, of course, with these ones, you have to fund it first, but it's yours, though. You control it.
Yours.
It's your asset.
Brian, man, I appreciate the jewels. This is probably one of my most favorite episodes we've had, because this is extremely tactical advice that anyone at whatever level they're at right now can go ahead and act on. So, yeah, I'll get with you right after this and get the link so I can make sure it gets stuck into the comments.
Brian, you gonna be in Cleveland?
Man, I don't think I'm going to be. That falls on we have a big family thing we do right in the middle of that every time, and so I'll be traveling in that time. So I'm not sure I can get away or not this time.
All right. And I'm going to give you a course. Yeah, Chris is going to put it in there, and then let's circle back. We're going to talk about this more.
All right, Blue Collar Millionaires. See you next time.
Thank you, Brian.